What is up, everyone? Crypto Comrade here, back with another video. In this video today, I want to talk to you about my current opinion on the state of the market, how I see things going forward, and how I see things right now. What are my thoughts on the current narratives that are going around? Will they play out? Will they not play out? And how should you prepare, or better even, how am I preparing? If you do enjoy the video, please give me a comment, subscribe so you don't miss any other of my videos, and leave me a like. That will really help with the YouTube algorithm. Also, none of what I say is to be taken as financial advice. I'm not a licensed financial advisor, and you should always do your own research. So I'm going to give you my personal thoughts, and then you should always either debate me, ask me, put me some questions, and you should always, find out for yourself and build your own opinion by watching my content and other people's content. That's always how you should be, and never take me or anyone else as the gospel of truth. With that being said, let's go to the video. So, looking at the technicals, the question on everyone's mind is, are we going up or are we going down? You can see a lot of theories, supporting both narratives. Most people, or at least, I mean, not most people, but some people say that this is just a dead cat bounce, that we will just go to about 50K or 45K or whatever, regarding Bitcoin's price, of course, and then we'll start falling back down and go into a bear market. Other people, however, are saying that we can actually go up and continue the bull run. To be completely honest with you, and this is something you need to start realizing pretty quickly, was something that took me a little bit of time to realize. I mean, I knew it deep inside of me, but I never really, made action with it. Is that most of the people talking on Twitter, on YouTube, including myself, we can actually be wrong. Okay, we can actually either have no idea what we're talking about, which is something that a lot of people have no idea what they're talking about, or we can have an opinion that doesn't turn out to be true. So you should always realize that no one knows for sure, okay? No one knows for sure what's going to happen. That's why you should always follow people, some of them who are mainly bearish, some of them who are mainly bullish. And then you can look at what both people are saying and you can build your own opinion, okay? That's pretty much how I do it right now, and I think it's the best approach. With that in mind, let's just take a look at some of the narratives that are going on, because I say this in every video, and this is really important for you to understand also, is that crypto is a narrative-driven space, okay? It doesn't really matter if you're looking purely at speculation and you want to build, you want to go for the quicker gains. Fundamental analysis is more, and it's what I like to do, it's more for the long term, okay? So I'm a big buyer of Polkadot, I'm a buyer of Ethereum, I'm a buyer of Bitcoin, because I believe that maybe not this year, who knows, maybe, I think we're going up, by the way, but even if we don't, I think that in 5 to 10 years I'll be up in my investment. And I think I'll be up by a lot, because those are strong fundamental coins. However, if you're looking for a rather more short-term gain, narratives are very important. So let's look at some of the narratives that are going on around now. So when we started to go down, this is the Bitcoin chart, and this is the 2017 peak, and there's a lot of talk going on about the death cross. Okay, so what is the death cross? The death cross is when you have two simple moving averages, the 50-day moving average and the 200-day moving average, that cross each other. So when you are in a bull market, this blue line, which is the 50-day moving average, should be above the 200-day moving average, which is the yellow line. And as they cross, so people say, we have a tendency to go into a bear market, okay? If you look back, there is evidence that most of the time when this does happen, we go into a bear market. Also, people always also say that as soon as we cross it, you can see the price doing a bearish retest, which means it tests the moving average from below and gets rejected, okay? And this becomes our resistance curve, okay, the 200-day moving average. Okay, so let's see what happens now. Okay, so now what do we have? Oh, and by the way, the price after the death cross, the price never gets above this line because it acts as resistance. However, if we fast forward to today, what we are seeing is that we did have a death cross, and this was one of the big narratives going around, that the death cross has happened, so we are definitely going into a bear market. There's no way we can be saved. Well, okay. The thing is, we are actually above the line we were never supposed to cross, and actually we're testing it for support. So this can mean, of course, today has not closed yet. This can mean that we go further up. Okay. So does this invalidate anything? Of course not. We can just, have a couple of days above and then go back again below. So my point is that you should never use, like, you can't always use, some people are too absolute with these ideas, because just because it happened here doesn't mean it will happen after. Okay, and I will show you an example of that really soon. So that's my problem with people that use technical analysis as a gospel. So technical analysis is good for you to get an understanding of how things are going, how are the trends going, if we are going down, if we're going up at the moment or in the short term movement. But you cannot say for sure that you know that because this happened that the price will never go up, because you just don't know. So you can't say that. And even so, you can also mislead people with being so absolute. There's nothing wrong with saying that you believe price will go down. I mean, that's perfectly fine. It's just like I'm saying, I think the price will go up. So it's everyone's opinion, but you should not treat it as an absolute like gospel, okay? Because things do change, okay? Now, what's this? So this is the 1 week chart, and what we have here is the 21 moving average. Okay, so the 21 week moving average, which is also said to be the marker of a bear market. So as soon as we go down, we might still go a little bit up, but then we also use it as sort of a resistance, and we are in a bear market. Okay, so if this happens, we are above it, we are in a bull market, we are trending above the blue line. As we cross below, we start to go into a bear market. Okay, so what happens now? We did cross below, but we are back up again. So maybe we're not in a bear market. However, if we go back to the previous cycle, 2013, 2014, not only did we cross below and we crossed back up and continued higher, but after that, we also crossed below and back up and down again. So there's nothing really you can say as an absolute, because it happened both ways. So like, people just need to stop putting all their trust on technical analysis, because that's not what it's meant to do. It's meant to give you an edge. It's meant to give you a better understanding of the numbers, but it can never be taken as an absolute truth. Okay. Another thing you can do with technical analysis is look at on-chain data. Okay, this chart is not mine. It's from William Clemente. You should check him out on YouTube, on Twitter. Is an on-chain analyst. He does a pretty good job and can give you some different insights. Okay, so what is on-chain analysis? As you know, everything that happens on Bitcoin and other blockchains is recorded on chain, and because it's recorded on chain, we can actually see what people are actually doing and not what they say they are doing, because those are two different things. If you go around Twitter, you can see that everyone always buys the bottom and sells the top. So you would think that everyone is an expert trader and everyone always matches everything and takes the most profits on every run. But you can also, like, if you really think about it, that's quite unlikely, and most likely it's bullshit. Okay, so we need to know what people are doing, and one of the things that he's very bullish on, he thinks the price will go up, is this talk about the supply of Bitcoin and the illiquid supply. So what is the illiquid supply? So Bitcoin can be on two types of supply. It can be liquid, that is, it can be easily traded. So this can be coins that most likely are on exchanges or are moving a lot. Illiquid supply is Bitcoin that is on cold storage and has not been moved. Okay, so it's supply that's effectively, it's not supply. Okay, it's being removed from circulation. It's becoming illiquid. Okay, so what we can see is that every time this is like the momentum. Okay, here in the lower line we have the momentum of this change of this supply. Okay, so if this is getting too complicated, just bear with me. So what we are seeing is, if this line, especially the blue line, starts to go down, that means that a lot of coins are becoming liquid. So they are coming from illiquid to liquid, meaning we could expect a sell-off. Okay, as the price goes down and crosses below this threshold, his algorithm strikes us with a red bar. Okay, here it actually failed more or less because we didn't have such a major sell-off. Okay, we did have a little sell-off over here. This was the September after the DeFi summer crash. It was not really a crash, but we did have a little sell-off. But as you can see, momentum to accumulate Bitcoin to cold storage increased, and as it marked the green signal, we went all the way back to the top. Then here it marked the red signal. Red signal, and means that Bitcoin was becoming more liquid, means more people were selling. And if this is theory, if we were in truthfully going into a bear market, we should expect coins to remain liquid, okay, and not illiquid. If coins are becoming illiquid, which is what happens here, it means that people are buying them and putting them on cold storage, okay. So they are not looking to sell them on a short time frame, okay. So this is actually bullish. For me personally, I don't know how to do on-chain analysis. You actually need to pay some subscription. You can use Glassnode or CryptoQuant, which are two websites you can use for on-chain analysis. They have some free things you can use, but it's not all the indicators are available to you on the free license, and you actually have data that is not recent, so it has a lag. Okay, so it's not great, but if you want to look at things from the long term, you can use it. I actually believe that this is something you can only do on the blockchain. You cannot do this with stocks. So you can't know who is holding what, how many people are buying, how many people are selling actually, okay? People can always come on the news and say they are buying or they are selling. If you remember, when we were up here, you had, articles coming out from JP Morgan, Goldman Sachs, and whatever, that Bitcoin could reach 300,000. And as soon as it crashed, they said it could go as low as 10K. So that's what they say on the news, but we know, okay, from on-chain analysis that the supply, the big whales, so the wallets with big amounts of Bitcoin are increasing. So these guys are telling you to sell because they are buying, okay? That is my overall thought about what happened in this crash, okay? But again, I can be wrong. So my take on on-chain analysis is you should try to follow people who do it, because I mean, price can be a liar, but what people are actually doing are not lies. So the people that move the price, the people with lots of Bitcoin, you want to know what they are doing, because if they are buying, you want to be buying too. You don't want to be buying or selling because they say they are doing something. You want to actually see if they are doing it or not, and you should adapt your behavior accordingly. Because if we knew that, we could see that as soon as this started going down, we should have expected a sell-off around here, because the price is trending down. The liquidity is increasing, so more people are considering selling. So if we knew this beforehand, we might have had a clue that something like this could be coming. Okay. So another thing that a lot of people do is this is the logarithmic chart of Bitcoin from its infancy, from 2011 up until today, and people draw channels. Okay, so a channel is basically a bottom line and the top line, and the price tends to go within a channel for a certain amount of time. And this is a logarithmic chart. Okay, so if this is a logarithmic chart, this means that when people draw these lines, they're not actually drawing a line on the linear chart. Okay, this line on the linear chart is actually a parabola. Okay, so it's going exponentially. Now, if you understand what exponentially means, it means you are, just look at the scale, okay? It doesn't go on equal intervals, okay? It goes on the power of intervals, so it goes exponentially up. And something that is exponential tends to grow to infinity, okay? So what's my problem with drawing these lines is that these lines expect prices to increase to infinity, and we know that can't be true, okay? Price will not tend to infinity. And this is something that I see a lot of people doing this channel on the more recent price action, claiming that over here could be our top. They can be right, of course, but I'm more inclined to believe that this will not happen. Okay, and I'm going to show you why. Let's say you were here on the 2013-14 cycle. You were here, you bought down here around 2016, and you were trying to guess where will 2017 go. And you say, well, taking into consideration this channel, we can see the top around here. But actually, that will make Bitcoin top at around $500,000, okay? Which, I mean, it would be pretty unreasonable to think that would happen. Also, as you can see, this channel did serve as support for some time, but we broke it. So as soon as we break it, we need to form a new trend line, which is the one we are currently on right now. But as you can see, the slope of the lines decreases dramatically. That's because it makes sense. The asset cannot grow exponentially forever. You know, it needs to flatten out. It needs to start growing slower and slower and slower because you know, it's easier to move Bitcoin from $1 to $10. It's more hard to move it from 10 to 100, and then even more from 100 to 1000, and so on and so on. So you can't expect to be like this, like a straight line, which is like a huge parabola, because that would mean that it would be as easy to move price from here to here as it is to move it from here to here, which is not true. It's much easier to move the price when the coins are cheaper. Okay, so what do I prefer to use? The logarithmic growth curves, because this accounts for diminishing returns, okay? This makes more sense because it maintains the trend as exponential, but it progressively adjusts the slope of the growth so that it better matches what it's more reasonable, because prices can grow exponentially, because as we see from Facebook, Google, Amazon, and all of these tech companies that we can value using Metcalfe's law, so the value of the network, the Metcalfe's law states that the value of the network is as much as the power of the number of users, so it grows exponentially. Okay, but of course it cannot grow like this in a straight line, which would be like this huge parabola on a linear scale. It grows faster at the beginning, and then it progressively slows down. Of course, some people are saying, well, but you know, Amazon was growing slower at the beginning than it is growing now. If you think about it in absolute terms, yes, but in a logarithmic chart, it grows linearly, okay? Because as Amazon became more global, it maybe moved like from 1 trillion, from 100 million market cap to 1 trillion. That's a huge jump, not as much as from 110 million to 100 million. So it makes sense to think about it, in my opinion, think about it Bitcoin like this. And as you can see, we have, this has been pretty much accurate. Of course, it can fail as everything. But as you can see, this has been pretty accurate. If you look down at the bottom part of the chart, you can actually see this red line, which is like the 2D representation of what happens in the chart. So as you can see, we are constantly testing the bottom and the top of this logarithmic curve growth channel. Now, this brings me to today, because today we have actually not reached the top. Okay, we are far away from the top growing curve, and which is a curve that we have been testing very, reasonably well in the past cycles. Of course, as with all the other technical indicators, we can maybe not reach the top. However, I think it's reasonable to expect that since we are accounting for the diminishing returns, that we could achieve this top, and we are very far away from it. That's one of the main reasons why I believe that we are not at the top of the bull run yet. If you look at the zoomed out part of the last part of the chart, which is our run today, you can actually see that we are below 50% on the channel. So this could be technically, again, not financial advice, this is still a good time to accumulate, because you still have a lot of room to grow. Remember, this is exponential. So this is not the distance on money-wise that goes from here to here is not the same as the one from here to here. From the middle of the chart to the top, it's way more than from the middle to the bottom. So this will be a time, that's what I'm doing. This could be a time for you to steal dollar cost averaging onto Bitcoin. Okay, that's what I'm doing. Again, not financial advice. Also, out of curiosity, if we do peak around here, which is the end of the year, the price that this model predicts is around $150,000 per Bitcoin. Of course, if the cycle goes on for longer, which is not unreasonable, okay, because we need more money to move the price, the target will go higher and higher and higher over time, okay? So just something to keep in mind. Finally, the thing that I believe most of you should learn, and this is what I believe ultimately drives price on the long term. It's fundamental analysis, okay? So it is pretty much irrelevant the price at which Bitcoin is trading right now. If you understand what Bitcoin stands for, you can pretty much reasonably understand that it will go up in value over time. So if you have a long-term perspective, you can stop stressing out about short-term price action and just think about the future. So what is my fundamental bullish thesis on Bitcoin? And why do I only talk about Bitcoin and Ethereum? Because these are the two main coins, okay? I don't think you can consider Ethereum an altcoin anymore. Ethereum is the only truly blooming ecosystem of the apps right now. I'm a big DOT fan. I was an ADA holder, and I like Solana. I like a lot of those projects, but they do not have the same user base as Ethereum. They do not have the same apps. They do not have the same liquidity. They do not have the same value, okay? This is just pure truth. This is not Moonboy talk, okay? Just giving you the cold, hard truth. So regarding Bitcoin, institutions are starting to buy in. They will not buy into something that they believe will be worthless, okay? They are trying to buy in because they think it will make them money. Also, this can also make you think about something. Did you really think that as institutions were starting to pile in? I saw a lot of people saying, oh, we just front run institutions, we are buying before them. I mean, are you really? Like, do you really think that they would let the little guy buy Bitcoin at a cheaper price than they did? Not at all. I wouldn't be surprised that this downtrend, this current dump we had, was mainly driven by these institutions so they could accumulate at a lower price. Because of course they would not buy at 60K when they can buy at 30K. Okay, that's just logical. And in an unregulated market, they can manipulate the price as they see fit, and thus it's easier for them to get to buy things on the cheap. Also, remember, we are having quantitative easing. It means we are diluting the supply of the dollar. The dollar is increasing in supply. Same thing with the euro. So it's kind of like a global thing. And as we are pricing Bitcoin in dollars, Bitcoin will necessarily go up in dollar terms. Okay, this is undeniable. Even if it stays at the same value, because we have more dollars in circulation, the dollar value of Bitcoin will need to go up in time. Okay, but as you might have noticed, it goes up more than what the supply of the dollar is increasing. So that's why we call it a good store of value, because it hedges you against this inflation. It keeps up and even grows faster than the dollar. Another very important point on the fundamentals of Bitcoin: it has reached politics. Right now in the American Senate, they are discussing a crypto bill, and Bitcoin is becoming involved in what in New York, the New York mayor is talking about Bitcoin. The Miami mayor is talking about Bitcoin. It has become legal tender in El Salvador. So we are reaching the next phase of Bitcoin. Bitcoin is rising and growing further every year. So, I mean, it's only a matter of time before things start to turn really, really big. Because I will end this with the hyper digitalization thing, but let's first talk about Ethereum. So Ethereum, why is Ethereum like? Ethereum 5 years from now will be worth a lot more than what it is worth today, because of DeFi. This is my main bullish thesis on Ethereum. The ability of someone that cannot have access to a bank to earn yield and earns some great returns on most of the cases when compared to a traditional bank. Even for us, even for us living in Europe or in the United States, you can get a much better yield on Ethereum or on DeFi than you can get on your bank. So, I mean, it's just natural evolution of things. We are starting to become autonomous, and we are using technology to make this is a progression to automation. We stopped needing the banks when we can have code and technology and the internet, but mostly code. You can have a hard coded truth on the smart contract that can never be displaced by anyone's interest. So the banks don't get to manipulate anymore, and we the true free market is like this. Okay, it's me trading to you and earning yield as an equal. Okay, also NFTs are like booming. I think I still don't completely understand NFTs, to be honest. The craze going around with CryptoPunks and the apes and the penguins, for me, I just don't understand it, so I just stay away from it. But I think they will be a great way to tokenize assets. Like, you can tokenize your car, you can tokenize your house and use it on DeFi. So this is destiny, really. Also, the EIP 1559 we will start to burn Ethereum every time a transaction is made, and we will be moving to proof of stake. And when this is done, and believe me, they will achieve this because you have some of the best developers in the world are working on Ethereum, and I don't see them failing this really. Ethereum will become deflationary. That means that if you buy Ethereum now, it's pretty much impossible, in my opinion, for it to be worth less, 2, 3, 5 years from now. It's my opinion. Maybe I can be wrong, but if the supply starts to shrink, that basically is like you getting dividends from a stock, or you getting stock buybacks, okay? Because the supply is shrinking, but you have the same absolute value, so you own more percentage of the total supply. That means you hold more of the network, so you only get benefited if you are an Ethereum holder. Finally, the biggest point I have for crypto, to be bullish on crypto, is what I call, it's not something I coined, but it makes sense on my mind, is the hyper digitalization. Okay, if you look around you, everything is becoming digital. Music has become digital, videos are becoming digital, and one of the things that we thought could never become digital, which are human relationships, they are becoming digital. You can talk via FaceApp. You have social networks like Instagram, Facebook, TikTok, whatever. You can actually build relationships through a digital mean, okay? Some people are, I'm not saying I like this better, I don't, but this is the way things are going. And you just gotta recognize the trend. Everything is becoming digital. Even things that we considered could not become digital are becoming. So why shouldn't finance and money become digital too? It's just a matter of, it needs to happen. And I really don't see, I can't imagine a future where crypto, DeFi, and digital coins, digital assets are not a reality. Okay, so that's it for today, guys. That's my take on the current state of the market. So basically, just chill out, hold fundamentally strong coins, and be patient. Okay, and you'll be rewarded. You can also, that's what I do, I hold most of my funds on solid fundamental coins. You can have some funds on the side to play with some small caps and try a little bit of your luck. But if you hold Bitcoin, Ethereum, and mainly these two, but strong fundamental coins, in the long term you will be rewarded. You will maybe have better gains with much less stress. Okay, so that's it for today, guys. Hope you liked it. If you did, please give me a comment, leave me a like, and subscribe, and I'll see you next time. Peace.